Hello and welcome to another video by Fringe Finance. Today we're going to look at how to open a margin trade leveraged trading position on Fringe V2. The steps we'll take today is we'll select a chain, we'll specify the trade, which is defining the assets, the exposure, the margin, and the safety buffer. We'll learn about elements on the margin trade UI. We'll open the margin trade leverage position and we'll close the position also. We'll do that in a number of ways, including using collateral, the regular way we'll do it, and also alternative ways. For a bit of context, where we're standing is today we're looking at the Fringe margin trade leverage trading facility, but in respect of the rest of the facilities that Fringe Finance offers, we offer the Fringe lending platform, which with lending and borrowing, the Fringe USB stablecoin, Fringe staking facility, and Fringe Amplify, and here highlighted the Fringe margin trade facility. Okay, the first thing I think we'll do is we will choose a chain. And the way we do that is we just select our chain selector and specify which chain we'd like to use. In this case, I'm using Ethereum testnet. And we can see here that we are now working on the Ethereum chain. Fringe's new margin trade facility allows you to open a margin trading leverage position for a pair of assets. What you do is we choose our assets, our long asset and our short asset. We choose the exposure we would like, which is a dollar amount of exposure. We specify the margin, and that is the margin of collateral that we'll put up to secure this position, and/or we'll specify the safety buffer. You can set your desired margin in dollars, which will adjust the safety buffer percentage. Alternatively, you can set a safety buffer percentage and the system will calculate the required margin for you. Okay, let's start this. Choosing our assets. We have a number of assets listed. We can show ones where we have collateral or we don't have assets available in our wallet. But in this case here, I'll choose this Project 3 token as our long asset, and as our short asset, we'll choose USDC. We'll set our exposure. In this case, we will set $200 worth of exposure, and we'll specify the margin. In this case here, we might like to specify $200 worth of margin. Now, what we'll notice is if we specify less margin, our safety buffer will change. If we specify we're going to put up $180 worth of margin, our safety buffer change from 20% to 14%. If we change this to 170, we see that our safety buffer changes accordingly. So depending on your risk tolerance, you can set these parameters for this trade as you wish. Alternatively, I can set my safety buffer, say 25%, and it will calculate the margin required to achieve that level of safety. That safety just ensures the position is suitably collateralized to avoid the risk of liquidations. It allows a greater tolerance for volatility of the assets. Let's have a quick look at some of the other fields on the screen to understand what we have available. First of all, we have price for each of these assets. Deposited here is any of the collateral for the long asset that I have already deposited onto the Fringe platform. I don't necessarily have to have had any collateral deposited to start with, because the margin trade platform will withdraw any required margin assets from my wallet. And this indicates the availability of the assets in my wallet. I've got 500 of these tokens and it has a certain value. This exposure limit here indicates the capital pool value for the short asset. Fringe leverage trading facilities are spot trading facilities, which means we utilize lending markets to establish your trading position. And as a consequence, the mechanism behind this employs the core lending capability of the Fringe Finance lending platform. So it borrows from the capital pool and it swaps that for long assets to give you the exposure you configured. These fields here just indicate how many of these tokens this equates to, this exposure. And this here, price, refers to the ratio between the two long and the short tokens. Our trade leverage in this case is calculated from the margin versus the exposure, and other fields here indicate the state of the position. So let us open this position. Fringe is in the background. A few things are occurring here. I've submitted to my wallet to open this transaction. Fringe in the background borrows the lending token on your behalf, USDC in this case, and it swaps that on an external DEX for more of the collateral asset that you're amplifying. It then opens your margin trade leveraged position, and we can see here that it has opened. And the open position here is a long asset is project 3 token, and a short asset is USDC. The current price of project 3 tokens, our safety buffer, the exposure that we have, the total exposure, and the equity that we have in this position, and any current profit and loss. We have a few functions available to us here, which is the deposit, the withdraw, and the close buttons. Deposit allows you to add additional collateral to this position to reduce any risks of liquidation. Withdraw allows you to withdraw any excess collateral or equity that you have in that position. And typically you may use that in cases where the position is running in a profit. And then we can close the position. Let's have a look at how we can close a position using our collateral, atomic repayments, or alternative ways to close a position. Let's press close and see what we have. Fringe provides 2 methods to close a position. Repay using collateral. This conventional method comes into play when there's ample liquidity on an external DEX market to exchange your collateral tokens and pay off the USDC loan in this case. Note, the feasibility of this method depends on the availability of suitable external liquid markets that align with your price impact tolerance. The projected price impact is displayed on screen, allowing you to make an informed decision. Alternatively, there's repay. This alternate method is applicable when liquidity on an external DEX market falls short. Instead of being locked into your position and not being able to exit, this scenario allows you to directly repay the loan to exit the position. Bear in mind, you'll need to have the position's borrowed capital asset, USDC in this case, in your wallet to execute the loan repayment. After repaying the loan, the remaining collateral is at your disposal. But let's repay using collateral, and this will be the standard way where you'll specify max and simply repay using collateral. My wallet is asking to confirm this trade, and what's occurring now behind the scenes is the opposite of what occurred during the position opening, which is a DEX is being used to swap some collateral to repay the loan position. And now that has successfully confirmed on the blockchain, and we can see that this position is now closed. In summary, what we've done today is we showed how we can select a chain. We specified the margin trade in terms of the assets, the dollar amount exposure, the margin, and the safety buffer. We've learnt about elements of the margin trade user interface. We've opened a margin trade position, and we've closed it, and talked about the alternative ways we can close it. So thanks for listening in today. We hope you found this useful. Have a good day and take care.